This entry into the history of financial futures is sponsored by Eurex.
One has to be aware that in these early days of the ETB, the German legislation considered futures and option contract as gambling contracts. Gambling contracts are not legally enforceable, so consequently it's no-go for a derivative market in any country if you cannot enforce the contract. That was the main issue, or one of the main issues of the German banking industry, of the German banks in general, that they had no legal environment which would be fit for creating a derivative market. But they, at the same time, they were insisting on they needed, for obvious reasons, they needed the futures contract on the Bund. Bund being a contract of the German federal government. Obviously, there was no real organization around at the time because no legal environment. So they were trying to convince their friends and colleagues in London that they should get started with a futures contract on the Bund. Of course, London, from my perspective and the way I saw it, they were very happy to have this contract, because if they have the support of the local market, of the market where the underlying actually is a key product, of course, then you're happy to launch a contract overnight if possible. And that was actually pretty much the issue which made that the Bund future started live at Liffe. Once Eurex was established, once Eurex was able to, and actually it started already with ETB, once they had a market in Germany, or a market infrastructure, I should say, and once they had the possibility also to connect people, at the end of the day, it turned out to become a issue of open outcry versus electronic trading. And I remember, as a Sofex, later on as Eurex, one of the running gags of the open outcry markets was, well, you and your Mickey Mouse markets, for your markets, electronic is okay, but if you have a real volume, if you have real big market size, the only way to trade is open outcry. Well, history tells us that this is different. So that was, from my perspective, one of the most important lessons I learned. Don't listen to too much of self-interest. When we started with Sofex back in '88, I think there was EOE was already up and running. I believe Monep in France and Matif in France was more or less up and running about the same time. But that was it. So there was nothing in Germany, there was nothing in Italy at that time, there was nothing in Spain. There was the OM in Stockholm, which started, I believe, 1 year before we did. They had this kind of semi-automated system where you could input the transaction in a screen and then somebody was noting it down in the exchange. That was already up and running. After us, we had then, of course, Germans with ETB. We had MEF in Spain, or in Barcelona to be precise, who opened up. The Italians came. And then then I actually lost oversight of who came when. Well, that was the cash cow on one side. In many of the financial markets, the derivative part was a cash cow. of course, mostly it was triggered by interest rates. And remember, in those days we still had all these European currencies. There was pre-introduction of the euro, and so interest rates and foreign exchange were, of course, for many of these jurisdictions a very important product which needed hedging purposes, and where you needed, on the other hand, the speculators who would participate in the market as well. In some of them, like we had and in Switzerland, we're starting with the equity-related products. For us, interest rate never played an important role. Of course, we had a long-term interest future, which was called Conf. Still, I think it still exists. We were even trying a 3-month Swiss interest rate futures, but it was never a big demand for these interest contracts. Jurisdictions, the other market places where you did have this need for interest rate hedging for foreign exchange. In many of them, first the major part was the interest and foreign exchange, and then as a secondary product they had then the equity and equity index related products as well. With the history of Chicago, with the long-standing products, with the important standing of Chicago in this financial environment, it was clear for us that we needed to get know-how from Chicago. So I remember when we had the important people coming from Chicago, we were inviting them for conferences, for presentations, and then everybody was sitting there in the audience and was really staring at these big boys from Chicago who had so much to tell us what we should do. And I mean, it was a real educational process. Of course, eventually, after a certain while, there were certain diversions from the way. It was not a copy-paste any longer. It was some kind of own development and which you would make. But at the early stage of all these markets, I think Chicago played an important role. We had some European, let's say, prima donnas, which would certainly be on one side would be in the UK, in London, with Liffe, Motif in France. On the equity side was more EOE in Amsterdam, where we were also looking, and this then created some kind of a club style. We met regularly in local and international conferences. So we had a lot of discussions, and by the way, in these meetings also the ideas about connecting to each other or connecting the marketplaces with each other were started, and was also certainly one of the first discussions I had with DTB. At a very, very early stage. The same would then eventually be with Euronext and their group of exchanges which came together. That all happened in this European brotherhood environment. I think it's probably the overriding contract which really took off was the Bund. Of course, you had a number of additional interest rate related contracts, which also were successful, but never to the same extent as the Bund. That was also the same thing on the equity side. Of course, you had the DAX future, you had the DAX option. They were important as well from an equity investment perspective. Burgenstock was actually triggered by some lack of regulation in Switzerland for commodity trading. You know that Geneva was and still is an important center for commodity trading. As far as I was told, it was some kind of discussion, particularly from the CFTC side here in the US, who were not happy with the situation that this market was or that the traders were completely unregulated. So a law, just to create a law overnight, was not really possible. Besides, I mean, CFTC could not go to the Swiss government and say, why don't you establish a regulation? They might have proposed it, of course, but at the end of the day, the second best solution was to create something like a self-regulatory organization, a kind of an SRO. And based on that, the Swiss Commodity Association, as it was called at the beginning, was created, which was clearly commodity oriented, because we didn't have any kind of financial contracts in those days, so it was well before the creation of SOFEX. Well, people went to Boca Raton. And Boca Raton is one of these nice places where you can have interesting conferences, but at the same time you can play tennis and you can play golf, and you can have social contacts with your peer. Then they were going, or some exponents of that association went to Boca, and they thought, well, what they can, we could as well, because we have some nice spots in Switzerland as well. And indeed, they came to Burgenstock, which is a hotel resort on top of a mountain hill, just in the center of Switzerland, near a lake, with a beautiful view on the city of Lucerne. And they were starting to have their conference up there, set up in the same pattern as Boca Raton. You had some panels, some discussions, but probably the more important part was the conference events. So the personal meetings which you had, the cocktails, the evening events, or on Saturday morning, then or Saturday afternoon, the golf competitions and things like that, where you really would then meet and where you would have serious bilateral talks. Deutsche Börse, as the important share and stakeholder of Eurex, decided to go and have its shares listed. Well, it did not really have an impact on Eurex, because Eurex was a subsidiary of the two exchanges. Formerly, either exchange, the Swiss exchange as well as Deutsche Börse, they had 50%. In terms of, there were some kind of voting rights which were giving the Deutsche Börse a more important position in that joint venture. But it did not really have an immediate impact on Eurex. And of course, you would feel, and I felt, that certain reporting issues which you didn't have before suddenly were there, and you had some kind of sometimes some kind of discussions, even fights with some people at Deutsche Börse in this respect, because from my Swiss side, and they did not have this all these requirements. There was no idea at all to have the Swiss exchange becoming a for-profit organization to be listed at the exchange. So that was, but it did not really have. And of course, we were profitable. We have been profitable before Deutsche Börse going public, and we were profitable after Deutsche Börse going public. So it did not have a big impact in that. Of course, that question that you was all the times, and how does the next quarter look like?